Okay, over to the slideshow. So tonight, as you know, we're talking about financial management back to basics. Pretty important topic as we head towards the end of the financial year, and hopefully some good tips in here, whether you're a startup or well established in business. So this is what we've got in store for you tonight. Just very quickly, we'll do a bit of an intro and show you how to get the most out of a webinar. I don't know if some of you, this may be your first webinar, so I'll give you a few tips. We'll then go through some key points and finally give you some time to ask some questions, and hopefully Melanie will be online by then and in a position to answer your questions. So my name is Yvette Adams, and I'm from the company The Creative Collective. So we're very proud to deliver these webinars on behalf of the Queensland Government and specifically the Department of Employment, Economic Development and Innovation, otherwise known as DD. So that's my face there, and as you can see on screen, I've won a few business awards, so I hope I can help you with some of my experiences in business on tonight's webinar. I've actually started 4 different businesses, all very different ones. One was a newspaper back when I was 17, which I sold after its first issue, did my first business deal at age 17. The next was an online t-shirt business, an online purely business, which I sold back in 2008 after running it for 6 years. And these days there's the Creative Collective and also an online education portal for mums. The Creative Collective is my big one, and as you can see there, we do work with people of all shapes and sizes, from startups locally on the Sunshine Coast where we're based, right through to nationally and even internationally. I think you weren't seeing that screen, so hopefully you can see that now. And I also want to let you know that I'm a parent of a 4-year-old and a 7-year-old, so I do empathise with any of you who are also parents running businesses. For those of you, I always like to test out you're there, you're listening to me, I encourage you to interact tonight. If you're also a parent, I'd like you to raise your hand if you're being a parent and running your business around them. Selena Hurrigan's got her hand up, so is Susan, thank you. For those of you who can't find the hand for any reason, just click on the red arrow and that will expand the menu, and then simply in that hand column, Susie's found it too, great, just click on that. So we'll be asking for your feedback here and there. Simply click on the hand, and when we're done, click on it again to get rid of it, so I know your question or your comment has been answered. Thanks very much. Okay, so let's get on with tonight's presentation. So I hope this isn't too basic for some of you, and it's very hard to know who's getting on and what stage of business they're at. But as the session's name suggests, this is finance getting back to basics. And sometimes, even if you are a little way down the road, it can be good to revisit the basics and just make sure you've got everything covered. And I really like the fact that with these webinars, or indeed any kind of training, it forces you to refocus on an area of your business that perhaps in the busyness of doing what you do, you kind of forget about and maybe don't place enough priority on. And May certainly is a time of year when you should be looking at your finances and making sure you're in the best position you can be, starting to talk to your accountant about getting most efficient for your tax, whether you need to spend money or you're not spending, you need to stop spending money, and also what you may be able to do to change things around to be more efficient in the tax year. But an accountant and having one is certainly important for your business. So before you've even started getting going, I always encourage people to surround themselves with a good team. And an accountant is one of those people that needs to be there, because they can see, as you can see on screen, provide you advice on how to start your business, get you the expertise with accounting and bookkeeping. And look, some people will even choose to actually outsource the bookkeeping and accounting side of it entirely to their accountants. And that is a choice really up to you, but certainly a lot of accounting practices do offer bookkeeping on the side. They also provide a range of tax solutions, most of them. They can give you advice on how to set up financial management systems. Most of them are very aware of what's around, how much they cost, which ones work well, which ones report well, which ones maybe integrate with point of sale or whatever your specific requirements are. So rather than spending hours on the internet working it all out for yourself, perhaps ask your accountant. They also, of course, give you financial advice, and they can also give you assistance and expertise in relation to buying or selling a business or a property maybe, or even leasing and that kind of thing. I know myself have recently purchased a commercial premises, and making sure the accountants were on side was an important part of the process. Now, at this point, this was the slight reason for our delay. This is the beautiful Melanie Jacobson of PJT Accounting, who's due to meet us online tonight. We did confirm her, and we're not quite sure, but she hasn't managed to log on tonight. Maybe something's cropped up that was out of her control. We're still trying to get a hold of her, and hopefully she will be joining us and ready to answer some questions. But this is a little bit more about Melanie. Right now, she's actually not online yet. As you can see on screen, she wanted to be an accountant from an early age, right from age 8, so nothing like knowing what you want to be from a young age, hey? She's been so into it that since 15 she started doing the cash books for family. She's now a qualified accountant, I should say, a chartered member of the Institute of Chartered Accountants, and she became a partner in the Sunshine Coast business PJT Accountants, who have gone on to win awards at just age 25. She's still just a spring chicken, really. And you can see on screen as well, she's got lots of experience in farming and manufacturing industries, superannuation and retirement. So hopefully she will be joining us a little bit later, and we can go from there. At this point, I'd just like to know how many of you already have an accountant you are working with on your business anyway. You could just raise your hand and show me. So Susie has, Lynette has, Susan has. Now, some of you, I'm wondering whether you haven't worked out where the hand is, or you really don't have an accountant yet. Because every business should have an accountant. So if you haven't got one and your hand is purposely not up, I'd suggest that's the first action point for tonight, is to go out and look for somebody really good. Okay, basic financial management. So at a bare minimum, there are 3 financial reports that all business owners need to prepare, understand and interpret, analyse. And I'll be honest with you, maths wasn't my strong point at school, and certainly when I started my business, finance was the part of the business that I really didn't enjoy, I didn't look forward to, I didn't understand, it really just scared me. But over time, I've come to really love, I don't know if that's the right word, but appreciate the information and insights that these key documents can give you, specifically a balance sheet, a profit and loss statement, and a cash flow forecast. So if you've sort of wondered, how do I know how my business is performing? How do I know if it's on the up, etc.? They're the 3 sort of key financial documents you need to be looking at. And certainly if someone was sizing up your business to buy it, they would be 3 documents they would be looking at and seeing for certain trends. Could I see if all of you, could I see a show of hands if you look at your balance sheet regularly, out of interest? Is anyone looking that up? No? Oh, Natasha does. That's good. Does anybody else? No. Well, there's one to look at. So your balance sheet, I really wish Melanie was online to sort of help me with this, so I'm going to battle on my own, and please appreciate this was not the intention. But a balance sheet is going to show all of your assets and liabilities, so that's quite good to know what your position is in that regard. And of course you want to be gathering up assets and be minimising the liabilities. A profit and loss statement, could I see a show of hands of who's regularly checking their profit and loss? That's probably the most common one that people do understand and are looking at. So Susie and Susan, Lisa and Lynette, Sharon is as well. Good to see. Well, profit and losses, those of you who put your hand up would know, clearly shows you all of your income. It then shows you your cost of sales. So they're the things that you've had to do in your business that have resulted in income, basically. You couldn't have done it without it. So in my case, if I want to do, say, a business card print run, printers is a cost of sale because I couldn't have had that job without it. And then separately off that you have expenses. So they're just the things that you may use for the day-to-day running of your business. Things like telephones, power, insurances, etc. would rather be in the expenses part. So after you've taken out all of those, you're left with your net profit. And certainly you want to be a profitable company with something at the bottom line all the time, don't we? Now, cash flow forecast is something a lot of businesses don't tend to have or have their heads around. Can I see a show of hands if any of you regularly look at a cash flow forecast? Lisa and Nola and Susie all have their hands up still, so do you want to put them down if that's not the case, or keep them up? Okay, Lynette, Natasha, Nola, Lisa are all doing cash flow forecasts. That's really good because, you know, 2 of the things that most businesses go under for, and I'm sure you've all heard the stats, is A really common one is that they go under because they either grow too fast and can't manage that growth, they can't get the staff, they can't deliver, either they grow too slow or they grow too fast. And the second one is cash flow. Whilst they might be, billing and having a demand for their services and things, the money in and the money out is just not balanced correctly. So it's really important that we do these cash flow forecasts. So for instance, when you've got any big changes coming up, or certainly when you're entering a new financial year, doing a cash flow forecast is a really good idea because you can work out what you expect is going to happen. For instance, in purchasing this property recently, I knew my cash flow was going to be tight for a good couple of months while I wait for the GST to be deposited back from the purchase, because I paid GST on the purchase and I'll get it back after the next BAS instalment. So at least I know that. And it's not like I'm just freaking out saying, when am I going to see this money again? It's all planned. It's exactly what I forecast, and I'm just going through the process now. I would love to have Melanie to help explain the importance of these financial processes and how they can help manage your finances more, but unfortunately she still hasn't joined us. I know Jag's in the background calling some people and trying his very best to get her online at the moment. I've got a question coming here. And Cassie's saying, is cash flow forecast supposed to be on the slides? I can only see basic financial management. Cash flow forecast is just down the bottom, Cassie, so you haven't missed anything. You're totally on track. Right, let's get back to these slides. I want you to think about these things, and again, there's some quite basic concepts on here, but we're going back to basics and we're making sure we've got it all covered. Number one, I want to ask you, do you have a dedicated accountant? And actually, at this point, I'm going to get you to answer a bit of a poll. So I'm just going to pull that up, and there's a really quick poll going to turn up on your screen. Okay, we should be able to all see that. You could all just complete that now. It'll be interesting to see how many of us do have that dedicated accountant versus those who don't. The other thing is to discuss with an accountant the records you need to keep to maintain control of your business, because I've given you 3 of the big ones. I'm not quite sure if this is open. Yes, it is. You're all completing. That's great. But depending on what you do, like for instance, if you have a stock-based business, let's say you're in retail, keeping a really good inventory and knowing how much stock you have in store and what that is worth at any one time is pretty important. In other cases, if it's services, it's pretty important to maybe record what services you're selling. For someone like me, I'm selling a big range of services, so I need to monitor all the time which of my services is in demand. Separately, you may want to know who's your most important client. So what I'm trying to say is that for everyone it's different. So have a good chat with the accountant and they'll help you decide the records you do need to keep. Now, some people can keep really basic records. They can keep it inside an Excel spreadsheet, and some businesses even do the good old ledger. But nowadays we've got these great tools, and probably the 2 most common ones in Australia when it comes to accounting systems would be MYOB or QuickBooks. So I'm going to close this poll and I ask yet another question here, and that is whether you use any of these systems at the moment. Okay, over to this one here. So this will be interesting to see whether any of you use MYOB or QuickBooks or Xero or Sasu. Just to take you through some of these and get some, in case you've never heard of them. MYOB has been around for a while. It's an Aussie product and it's done very, very well internationally actually. People like it because it's very basic. It helps people work through their accounts and with sort of just a basic level of understanding. QuickBooks is a little bit more elaborate. It's out of America, I believe. But in both cases, both those products now have online services. So MYOB only recently launched last year, but it has been gaining some momentum. And Xero, the third one on the list there, is actually a New Zealand product, and that's very popular. It's gaining a lot of momentum because it's cloud computing based. And what that means is that you can log on anywhere, anytime, from your phone, on a laptop, from home, from work, on holiday, and see how your accounts are performing. So that's what I choose to use. I was a MYOB girl to start with, but I've found that absolutely invaluable from the point of view that when my bookkeeper went on maternity leave, she could continue to do the books from home on Xero, and I can log on anytime and see how things are. The other great benefit is that you can provide access to your financial planner, advisor or accountant, and they can actually log in and also get a live view of how your books are performing. So we've had situations where we've allowed that to happen, and the accountant's picked up on something we were perhaps coding wrong or not putting into the right area, which has been really valuable. And another great benefit of Xero, and though I don't get commissions for this company, it's just, I guess, expanding your mind on different ideas and systems there are out there, is that you don't have to send a zip file and wait for the accountant to complete the work. You can all be working on it live, and that can be pretty useful. And also good for backups as well. When we've had things like floods and cyclones in recent times, some people have lost their hard drives and lost all their data and lost lots of work of data input in regards to accounts. With things like Xero, it's all online and backed up as well. So 33% of you have said other, and I'm really curious to hear what other systems you use. So if you could text chat me, I'd be interested to share some of those ideas, so maybe some other names that we can share with the rest of the group. Now, another important consideration with your account system is maybe integrating it with your POS or point of sale. Again, if you're in, say, retail or products, you know, actually taking that invoice that you've sent that person or those sales at the markets or something like that and re-entering them is really going to be quite a big job. So if you can actually have it automatically depositing in there, perhaps it's sorry, I've just been distracted by a screen flicking up. If you can have it automatically depositing in there, it can save you a lot of time, it can give you immediate results and really help you drive your business again. So I know, for instance, that Sasu does have a point of sale integration which suits a lot of people. So I've got someone sharing just Excel, and like I said, that's fine if that works for you. But you may find that over time, having the benefit of exporting and doing these reports can be pretty useful for you to get your head around. I love the fact, for instance, I can just hit a button, profit and loss for the last month or for the last 3 months of the year on Xero, and it prints me a pretty report and gives me some ideas. So do get help with setting this stuff up. There are a few tricks and tips, and if you get it wrong from the start, that can make things a little bit difficult as well. Okay. Again, Melanie has not joined us, so I'm going to babble on, but and I'm no accountant by any means, so usually at this point I'm asking her a lot of questions, but let me share my knowledge as best I can. When it comes to accounting principles, we have two, and that is there's money in and there's money out, and it all needs to balance. So to get your head around this, there's three main sources of money in. There's sales from what you're selling, your goods or services. There's owner's capital. If you or a partner loan money or put money in to start with, it would usually be called proprietor's capital. So that needs to be recognised because potentially you want that money back at some stage. Then there's loans. That could be from financial institutions, as you can see, sometimes shareholders, etc., that lend the bank money. Now, each of these principles affect business finances, and really making sure we've got enough money in is important. So often I see businesses go out and start businesses without really thinking about the actual setup costs and then the ongoing operating costs. So perhaps they would have been better off to set off a loan to get that cash flowing to start with, rather than trying to do it all on a credit card or, you know, reinvesting the money. Other times that's not so necessary. For instance, in my area of business, there's not a lot of startup costs. I really only need a computer and an internet, a printer, a phone, and a few other basic things. Whereas other businesses have really quite high startup costs in the form of machinery and so on. So it really depends what business you're in, but obviously getting sales and even variations of these. So you rely on one source of sales. A way you can improve or strengthen your business is actually to diversify. Making sure you've got multiple revenue streams is a real favourite thing of mine. Now, when I started business, so pleased to announce Melanie has arrived, so we'll get her ready to help us out here. Might throw straight into the slide even. When I started out in business, I did have some naysayers saying, you're offering too many services, it'll be too hard to manage. But what I've found is through things like downturns and economic climates, if I'm not getting money from one source, I'm really pleased to be able to get it from others. So for instance, we do education and training, and we have websites and social media and other services. So give it some thought as to how you may be able to diversify your revenue streams. So I'm just going to see if Melanie is good to go. Where is she? Here she is. I'm going to unmute her. Welcome, Melanie.
Hey Yvette, how are you?
Good, thank you. I'm so pleased to see you on here. I've been battling on and trying my best to share my notes.
That's all right.
New accountant.
Computers are great.
Okay, cool. So I was just, if you're good to go, I was going to pull
no worries.
on the slide and just ask you how each of these principles affect business. And yeah, if you could just discuss it from an accountant's point of view, that'd be great.
Yeah, I'm on mine's showing mild and that at the moment.
Okay, let me close that and we'll pull back up and we'll close that. Show my screen. Okay, there we go. Now you can see it?
Yep.
Okay, so we're talking about money.
So how this affects you.
And we're talking about money in specifically.
Yeah, so money in, like the main thing you can control is sales. Is how much you get and what profit margin you get from the sales. Owner's capital, especially in this sort of economic climate, it gets limited as to how much eventually you can keep putting in, that you are getting returns for. And the loans, that's what the banks will lend you. And the banks, as everyone knows in the media, is keeping us informed. It is getting tougher and tougher for businesses to get money from the banks because there's so many requirements around lending and those sort of things. So for myself, when I work with businesses, the main area we focus on is sales and use loans and owner's capital just to smooth out those highs and lows in the cash flow periods. But focusing on sales is really the way we can increase the money into the business in a sustainable way.
I was also saying, Melanie, on sales that, you know, having multiple streams of income that produce sales is a good idea and how that's been really beneficial to me. Is that something you recommend to your clients as well?
Yeah, definitely. Different product lines or different methods of getting money in. Also looking at the timing to get money in and the profit on each product you sell. Like you don't want to focus on sales that have really low profit margin. If you could do something with a higher profit margin, because then you might not need to sell as much, but you'll get a better profit at the end of the day. So it's looking at all those sort of things as well. Sure.
I think we'll move on into money out. So I might even just get you to take us through these slides because I know you know them better than me in terms of commenting just on stock, operating expenses, things that are really important for these business owners to focus on.
Yeah, no problems. So stock, that's what you have to purchase to sell, and that's one of the big things that if you don't have stock, you don't really have anything to sell. In my sort of industry, I sell knowledge and time and those sort of things, so I need to make sure that I have enough staff to sell those. But stock, it's making sure that you have enough stock and that you're turning it over regularly enough that you're not got a lot of money invested in stock that you only turn over every 6 months. So the quicker you can turn that stock over, the more beneficial it is to your bottom line. Operating expenses, these are just your day-to-day, what you need to pay to open the doors. Things like wages, rent, power, accounting fees, all those sort of things. And a lot of these is you can measure them at the start of the year and go, this is how much they'll be. So then it gives you a good idea of what amount of money you need to turn over with what profit margin, just to be able to break even each year. And that break even calculation, I think, is probably one of the most important calculations for a business to do. And the majority of my clients all know exactly what their break even point is, because what I find at the moment is a lot of businesses, it's not that they're doing anything necessarily wrong, they're just not turning over enough money for how much it costs them to have their operation. So if they're not shrinking their operation, the expenses are too much for how much actual turnover they're actually doing.
I might ask at that
assets
point, Melanie, could I get you to put up your hand if you know your break-even point, people? Just a show of hands, because that is a really important stat to be aware of and carefully monitor. Not many people putting up their hands. That's something perhaps some of you might want to ask Melanie about. Cassie does, so that's positive. Might be something we discuss a bit more in the question section. Away you go, Melanie.
Yeah, no. Yep, so assets are the things that you need, like your fit out of your business. It might be a motor vehicle, it might be if you're in manufacturing, it's all the plant and equipment that you need to have that to keep the business going and to produce what you need to produce. Repayments are what you need to pay back to the bank or to your investments or even to yourself. Like, you need to make sure that if you're not taking wages that you're at least getting some sort of return for your investment in the business. And dividends and profit distributions is the profit that's paid out. As business owners, you'll often reinvest that profit back into the business to buy more assets and those sort of things to keep the business going. But it's making sure that you are still getting some return from the business as time goes by as well, because none of us want to work long and hard hours for no return.
Absolutely not. All right, let's keep moving on in the interest of time, because I'm pretty sure this lot is going to have some questions at the end. So how the numbers work cash flow, we talked about just before you got on how two of the biggest killers in business is managing growth, either too slow or too fast, and cash flow. And I know cash flow has been a big killer for businesses in recent times that have unfortunately been going under, and some are still struggling with this right now. But as you can see on the screen, and we'll get Melanie to comment some more, working out your cash flow is setting a selling price, actually selling your products or services, calculating your gross profit, paying expenses, and then having that net profit left at the end. I'm just looking at, if you could comment on that too, Melanie. Like, how is that, would you agree with the cash flow issue, and that's a big one for businesses? Are they not setting the selling price right? What part of this sort of flow are they not doing right?
It's lots of different things that go into cash flow being an issue. And the biggest thing for people to bear in mind is that often many businesses that go bust aren't businesses that weren't profitable. They just run out of cash. So it's knowing the timing of when you have to pay for things. So if you're paying for your stock and it's taking you 6 months to sell it, well, you need to have that much capital that you can have tied up sitting on your floor until you can sell it for that time. It's the same as if you've got large loan repayments, but you're not actually making enough profit to cover those loan repayments you have to make. That can be another issue. Not selling stuff for enough is a big issue I see at the moment. So once you've worked out so if you work backwards here, like if your net profit's 0, that's your break-even point. If you've got all your operating expenses, then you'll know what your gross profit has to be, which is the profit you make on each item you sell. So then you'll know how much you need to sell with what profit margin. So as one of the key things people do at the moment is discounting, which is all well and good, but it doesn't matter if you turn over $1 million or $800,000. If you turn over $800,000 and make more profit on that $800,000, and you've probably done less work than if you turn over $1 million, but you've discounted, so you actually make less gross profit. So it's watching little things like that that can eat into your profit margins and those sort of things, and knowing how much you need to sell for the year, or how much gross profit you need to make to open your doors each year, is probably a key.
And there's a great ad on the telly at the moment, isn't there, with one of the banks where they go in and the bank tells them how much they can save. And sometimes it is just doing that, going and sitting with a financial professional who can just make a few small tweaks to your business, and suddenly it's a huge turnaround, which, you know, sometimes you just can't see the wood for the trees, as the saying goes, when you're stuck in there working day to day. And like you say, it doesn't necessarily have to be the big money you're commanding, it's just how you've got it all structured. So some good ideas in there.
Yeah, and it's probably it's getting someone, it's spending the time, and I know a lot of my clients spend the time with me to get their cash flow in place, because it's sort of the plan for how the business works. It gives you that confidence when you're doing and making decisions in your business to know how it will affect the bottom line, and you need that working cash flow that you can plug it through and go, okay, well, that's how it'll affect. I work with a lot of farmers, so they only get income twice a year, so it's really important for them that they have a good handle on their cash flow. So that's where I see it's a great benefit.
Sure. So moving on to the balance sheet, which we touched on very quickly, but I did discuss that it's what you own assets minus what you owe liabilities equals what you're worth and owner's equity. So looking at the balance sheet, when we had a raise of hands, Melanie, a lot of people were looking at the profit and loss and cash flow, not so many looking at the balance sheet. So how does a balance sheet help businesses?
Well, it tells you how much is there, like especially if you, a big issue is if you owe more than what you own, well, how are you going to pay for it at the end of the day? So if you are building up more liabilities, so it might even be simple things like GST debt, creditors, those sort of things, but you don't have the debtors or people that owe you money and money in the bank to pay that, that's when you know you've got an issue and you've got to find someone to help you find the extra funds. A big issue I see at the moment is people not looking at the balance sheets, and they're taking money out of the business and not declaring it as wages or anything because there's a loss, but then they end up owing the business money,
Right.
and that can be an issue as well.
Sure. All right, we'll continue because there's still a few slides. Profit and loss we also touched on, and that's quite a good little screenshot there. Now, just to remind you, as part of this webinar, you are issued with quite a comprehensive workbook, and there's some excellent exercises in there, and that are images taken directly from there. So your account system, depending on which one you use, may or may not look the same or look similar, but through working through the workbook, it should really give you some ideas on how to get your head around finances. And although, of course, we are recommending you get in touch with a financial professional and sit down with them, the more educated you can become, the more familiar with your figures and, I guess, key trends and activity within your business, the more able you are to ask educated questions to your accountant. So next week I know I'm going to sit with mine, and I've got a list of questions from looking over my books and thinking, what about this and what's that and how do I make that look better? So that's certainly, I imagine, what you recommend, Melanie, that they should be having a look and coming to you with those questions, including stuff related to their profit and loss.
Yeah, definitely. Ask as many questions as you can, because if your accountant is good, they'll give you the time and explain what and how and that's going on, because at the end of the day, it makes you a better business person if you understand what's going on as well, so you know then what questions sort of to ask. Accountants are like any professional. Sometimes it's sort of assumed knowledge that if you're used to walking all the time, for us, we're used to reading profit and losses, so sometimes we forget the little basic details, and that's where people need to go, hang on, what's this? And then it sort of triggers to go, oh, that's this, 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 and this. So ask as many questions as you like. There's never any silly questions.
Okay, thank you. Now, net profit we've also touched on, and I'm aware we're just a little bit behind schedule, so I'm just going to pick up the speed a little bit. The net profit, as you can see, is what is left over, and hopefully it's a little bit more than you can see on screen, because that wouldn't be buying you much more than lunch. But net profit, Melanie, I've always wondered, like, what percentage of net profit should you be aiming for? Because I've always heard people say you don't want too much because you end up paying it to the tax man anyway.
It depends on what your personal goals are. At the end of the day, everybody has different goals. Everyone needs the profit from the business to do different things. So it depends what you're wanting. If you're getting a market value salary, you definitely want a net profit more than what you would earn if you invested the same amount of capital in the bank, because otherwise you just go and put the money you've invested in your business into the bank and you'd earn more without the heartache.
Mm-hmm.
So you definitely want more than the bank rates, but it all comes down to personal goals.
Sure. I mean, I've heard a figure of 10% net profit is a good one to aim for. Is there any substance in that or not?
Yeah, that's not a bad thing to start with.
Mm-hmm.
It just depends on the industry and that sort of thing as well.
Sure.
Some businesses make money when they sell the business as opposed to along the way net profit. So it all comes down to asking the questions, as well as to ask your accountant for some benchmarks or something to say what would be a good profit margin to have.
Sure, and many accountants do have access to industry reports and some great benchmarking tools, whatever industry you're in, so that's a really great tip you've just shared there. Now, break-even point we've talked about, and we actually asked, and not many of the group knew their break-even point, so that would be an action point that would be highly recommending tonight, wouldn't it?
Yeah, definitely. It's sort of the starting point to the business, because how do you know what to aim for if you don't even know what you're going to need to do just to break even?
Sure.
And your accountant can help you with this.
Yeah, of course. Profit versus cash, this is another common sort of question that people have, is sometimes they see the profit on the net profit line of their business and think, but I don't have $40,000 in the bank, if that's what the net profit is saying. So can you explain how that kind of works as well, Melanie?
Yeah, well, the difference is that your profit might not necessarily be cash in the bank, because it might be tied up with debtors, so people who owe you money. It might be tied up, you've reinvested the profit into stock. It could also be that there's more in the bank because you owe people money, your creditors money, or you owe the tax office GST. Or it could be less if you've had to purchase more capital assets because that's where the profit goes to invest in those assets. Or if you've had to pay down debt, there could be more in there. So that's where the profit's probably gone.
Yeah.
It is a good question to ask your accountant when they finish your tax at the end of the year, or if they're doing tax planning at the moment. Just ask them to do the quick calculation, where is the profit gone? And many of them can do that for you in a few minutes.
And many accountants can do clever things with distributing profits. I mean, I know one, for instance, is if you've got children of a certain age, you can distribute through a trust structure, so all the parameters need to be right, but a certain amount per year that's tax-free. So sometimes when that profit is an issue, which is a good problem to have, there's all sorts of clever tricks to minimise that, isn't there?
Yeah, there is. They're legislating at the moment just to minimise how much you can distribute to children. So it's come back to $416 from 1 July next year, most likely, where it was up to $3,000. So
gosh, that's quite a difference.
That not as good.
Interesting stuff. Okay, cash flow, inflow, outflow. We've talked about this a little bit already, but as you can see on screen, cash flow inflow, the money in, could be cash from the sale, could be the loans. Cash flow outflow could be any of those things on the screen there. I don't know, do you feel like we need to cover anything more in that regard, Melanie? I feel like we've covered that pretty well, don't you?
Yeah, no, that should be fine.
All right. We'll move on to cash flow cycles, because these are, again, straight from the material provided in the workbooks, but some good examples there, like Melanie's rightfully pointed out. Really depends on what business you're in as to what sort of cash flow cycle you might expect. So if you could all just pick whether you're a trading or service or manufacturing and drop me a little text, it will give me an idea as to which businesses you are. Melanie, can you explain the differences in these cycles and why they vary from business to business?
Yeah, so they vary from business to business due to how you're purchasing and those sort of things. So a trading business is where you simply purchase stock, you sell it, you might sell it with payment terms, so that's where your debtors come involved. You need to collect the debt and then it turns back into cash. Whereas a service business such as myself, I don't need to purchase stock, I simply make sales. So the only thing I might have in there is a little bit of wages in between. Then I have debtors, which I collect, and then I turn into cash. People in manufacturing have it a little bit harder because you have to buy the raw material and the goods, then you have the production time, then you finish the product, then you have to sell the product, then you need to collect from the product you sold and the collection days. So the time from when your cash gets put into stock or raw materials to when you can actually sell it, that can be sort of the killer. And that's why manufacturing businesses, as you can see, because it's such, it's a lot more complex there, they have a lot more issues with cash flow that they need to really have a good handle on, because they could have a lot going out up front. And that's where they need to manage that, one, that production's done as efficiently as possible, that the days are less going from when they have to purchase it to when they sell it, and their collection days. So it's the same with...
sorry, go Melanie.
Yeah, it's the same with the trading business. Like if you can get your stock, that you don't pay for the stock until your debtors pay you, that's a lot better situation than you paying for the stock and wearing that cost until you actually get the debtors paid. So a simple one would be, a simple trading business could be something like a shoe store, where they purchase the winter stock and then now they're selling it. So then, but they just won't have the debtors in there.
So just so you know who we've got online, we've got someone saying they're in service, manufacturing, tourism service, someone else doing accommodation, mini-mart, meals and takeaway fuel. So all very different businesses, and good for everyone to, I guess, appreciate the different cash flow cycles we're all subject to. I find them really easy to follow diagrams. Pictures make sense to me. Maybe some of you are like...
And it's a good way to measure as well and monitor your cash flows, to have a look how long it takes to get from each cycle.
Sure. Now, cash flow tips, if you're looking for some great tips, there's lots in that workbook again. So once again, refer it. If you hadn't had a chance to go through it, do refer to the emails you were sent post signing up for this webinar and download it and make a commitment to go through it. But Melanie, of all the cash flow tips you've probably seen over the years, can you recommend a quick few?
Yep. Having a plan. Cutting days off your payment terms. So if you're at the moment, you give people 14 days. why not try giving them 7? Even if half of them pay in the time, it might work. Monitoring the amount of stock and how long it takes for the stock to turn around is probably a big one for people who are carrying stock at the moment, just so that you're not outlaying too much, and asking for better payment terms. But you can't measure any of this and look at how you can improve it until you actually have that plan down on paper, to see exactly what's happening at the moment. So my best tip for any client is to actually have a cash flow that you work and you use all the time. You need a yearly cash flow and then a monthly cash flow as well that you measure each day.
Sure. And if I can add another tip in there, as a service-based business, we use a system called FreshBooks, and we love the fact that we issue out invoices and that we can set up automatic follow-ups at a 7-day, because that's our payment terms, 10-day, I think 20-day and 30-day. So by the 30-day mark, they've got 4 messages which have become increasingly more firm, and there's a link that they can log in and pay online. So there's no excuse them not knowing whether it's paid or not and needing to be issued another statement. There's no excuse for them not, sending the money and it getting lost in the mail. They can get online and pay. And we've certainly found ever since we implemented that system that our debt collection times are much improved, and therefore our cash flow is much improved. So we average about 10 days, which I've heard from comparing notes to other business owners is really very good, even through this difficult economic period. So something perhaps to look into is automating.
It's making it easy. Yeah, you need to make it easy for people to pay, have lots of different methods in which they can use, have it that it's upfront, that they know what it's going to be. Those sort of things all help.
Pauline's just asked, what's it called again? I use a system called FreshBooks, and if you forget any of these names, lots of them are listed on our website that you can go and check out some of the systems we use and recommend. You must have a budget, so it's not just for the government, these things. Every business needs a budget as well. So how many of you in business online right now do have a budget? You could show your hands. Haven't fallen asleep on me, I hope, being the last thing in the evening, what we're doing. Cassie's still got her hand up. I haven't seen any more hands, so perhaps none of our people have a budget. Oh no, that's a worry as well. So you can see a long list there, and again there's some guidance in the workbook of the types of things you've got to consider in your budget, but pretty important to know if you're on track and to get a handle on it. And when you've got a budget, you can start working out where you could possibly save money on things like cost of sale and expense, particularly regular occurring ones. So maybe insurances is one that I've found from shopping around and comparing, you can often save money on. Telecommunications can often be a huge cost to a lot of businesses. So again, shopping around and working out what you can do there. Have you got some other tips on budgets there as well, Melanie?
A budget's probably a good starting point to get your cash flow done. So they sort of go hand in hand with having both. And it's just a matter of sitting down doing it, and it's having a personal budget at home, because then you'll know what sort of profit you need to aim for.
That's right.
You know how much money you need to earn.
Budget. Yeah. And anytime there's a major change, to revisit that budget. So, with us recently buying commercial premises, when you were taking on a whole lot of new expenses, so we had to do our budget based on what we anticipated those expenses would be. At that point in time, we didn't know how much the security would be or the new telecommunications, but we gave it our best shot when we're doing we did the budget first, then the cash flow forecast, and that's how we came to the decision of deciding to buy it. So, whenever you have those increases and fluctuations, change, good time to do another budget. And it would be a good time to do it towards the end of the financial year, maybe for the next financial year, wouldn't it, Melanie?
Yeah, it gets the year all planned, ready to go, and you sort of got something to aim for. And if you have staff, share the numbers, share the turnover of what sales you're aiming for each month, because it just makes it so much better for them to get involved and try to help you achieve it.
Yeah, I do that too, and I find it really gets them motivated when things are down or up. They have buy-in and they get excited when they know they're part of it, don't they?
Yeah.
So finance, you talked about earlier that it's getting harder to get finance. There is startup finance, there's business loans, family loans, overdrafts, line of credits. There's quite a few different types of finances. As you can see on screen there, you need to be in a good position to make an application to a lender, and it will depend on a lot of those factors there. Have you got any other considerations before borrowing money, Melanie, that people might need to think about?
You need to have your budget and cash flow done so you know you can pay it back. And the banks more so now, I'm finding, are asking for cash flows and budgets, and they want them to be accurate, that they can see, that they can relate back to your figures.
They're quite like business plans,
so, yeah.
don't they?
They do. A lot of times they'll ask you, they'll get that from their discussions with you.
Mm-hmm.
For them, the cash flow, and that's really highly important, and it fits with your business plan. The two all need to relate. So if you say your sales are going to double, you need to show how you're going to double them.
Sure. I've also...
It's just a matter of talking to your bank manager too, or your broker.
And I would also say that probably just as important as having a good accountant or financial professional on side would be to have a good bank manager, because the more you can communicate with them who you are, what you're trying to do right from the start, if they're on your side, it's amazing how far you can go. And just having direct access to them, I've certainly found a good benefit in business as well. Good record keeping. This stuff's pretty important, so hopefully you're sitting on your filing cabinet knowing it's all filed away. I can't say I would be that person, but I do certainly make a point of going through and doing it every now and then. I guess one big reason we do good record keeping is we can all be potentially audited at any time, can't we, Melanie?
Yeah, definitely. And the tax office is increasing their audit activities, so it's just having everything there. They're trying to help. They want to make sure people are under control with everything, so it just makes it easy, and it's one thing that it frustrates people and it causes them lack of sleep not being on top of it all. So if you just keep on top of it every week, it's not such a big issue then at the end of the year or the end of the quarter when you have to do your BAS.
Sure. Now, I also wonder, in this digital electronic age we're living in, where we're getting receipts and we're making payments and purchases online, when it comes to auditing, are you supposed to be printing out all that paper and storing it in a folder in case you get audited?
Mine's all paperless, so ours are all scanned into our document management system.
Mm-hmm.
So, and that's fine for an audit as long as they can see it and tick off where you got the numbers from.
But all easily retrievable on an online management system of some kind, probably. So probably not on emails as an attachment. It's not going to work, is it?
No, no. And you need to be organised and structured as to how you do it so it's easily achievable.
Mm-hmm.
And there's lots of things out there you can do. And you need to make sure you've kept them for the 5 years maximum.
Sure. I can see you've got a question there, Susie, which we will get to. We're just about through all the slides and then we're on to questions. So thanks for hanging in there. This is actually the last slide with a bit of content. Credit policy. I talked about the fact that my credit policy or payment terms is 7 days. Some businesses do 30 days, but it's pretty typical, isn't it, Melanie, that whatever days you say, you're going to get it quite a lot later. So it would be pretty commonplace to make them quite short, wouldn't it?
Yeah, definitely, definitely.
So
it seems to be human. Beg your pardon?
You would recommend 7?
Yeah, well, I do 7 days. It seems to be human nature to think we have to give more or people won't shop with us, but more and more businesses are doing pay up front and those sort of things as well now, so it's just giving it a go and seeing what people say. A lot of this stuff of the past where people say that you have to do it a certain way, there's no written rules as to you have to do it necessarily. Some industries do, but majority don't, so it's always challenge the norm, and if you can get it in 2 days later, imagine what it'll do to your interest in that you're paying.
And I'm always shocked as well when I deal with small businesses that they either don't have a credit policy or they may have a tiny wee one-liner on their invoice saying 7 days payment, but there's no other sort of terms on there. You know, what should happen if it should be late and etc. So you really need a good sort of paragraph or two explaining your payment terms and maybe even referencing back to a page on a website, particularly if you're selling something online as well. Is there any way you can source good credit sort of payment term, I guess, templates, Melanie?
I'm not actually sure. There might be some on the DD website. I haven't actually found any. We just use our own, but because ours is set by our institute, the key is to tell people up front what your payment terms are.
Mm-hmm.
Don't let them find out afterwards, and tell them your price up front, and they'll be more prepared so they won't try to string you out.
Sure. All right, people, thank you so much for your patience, and thank you, Melanie, for all those wonderful contributions. So Now, if you'd like to ask a question to Melanie, good chance, accountant online, you don't have to go in and see someone if it's just something small. Raise your hand now and we'll happily unmute you and you can ask her while you're all deciding what you're going to ask. I've got a question here, Melanie, from Susie England, who asks, I'm in a service industry and find it hard to forecast income when you don't have a lot of idea of how many new clients you will manage in the next 6 to 12 months. How do you get around this problem to make the cash flow realistic?
You still need to, like, well, I'm in the same boat. I set a plan and then I set my marketing and that to go with the plan so that then I've got KPIs for myself and my team, which is your key performance indicators, to know whether I'm hitting the targets or not. So I know with my marketing how many new clients I should generate and then what products I should sell out the end. You're never going to be 100% accurate, but at least that gives you a starting point of what you need to be doing, and you can see whether it's realistic, whether if you're aiming for 100,000 a month but you physically can't deliver that much a month, it's not going to happen. So it's just starting with that sort of base there as to what you're aiming for and working backwards. Okay, well, what activity do I need to get that there? And then working with it and making sure you do your highs and lows, because a lot of people in service industries, and I'm not sure what industry you're in, but January might be really quiet, so you need to make sure you're getting more money in the other months to counteract for that, and have a look what you've done previously as well.
That was the point I was going to add if you didn't pop that in at the end there too, Melanie. It depends how long you've been in business, Susie, but if you've been in business a year or two, you've got that track record. So if you want to know how you might do in May 2012, look at May 2011, and you could say, well, it may be more, so maybe add on 20% if you think your business is in a growth stage. So you really can just give it your best guess based on that kind of data and some of those other tips as Melanie's shared. So Susie's actually added she's in strata management and only been going 5 months. So it's always hard in the startup phase, isn't it, knowing how you'll go, Melanie?
Yeah, it is, because also you're trying to work out who your ideal client is and those sort of things as well. So it's sort of knowing, for yourself, for peace of mind, what I generally tell clients is know how much you need as a minimum, because then you'll know, with 5 months now, you'll know what your lead time is as well. So I know sometimes talking to a client, it might be a month or two before I actually get to deliver the work. So I know that whatever activity I'm doing now in May or June will pay off in July, August. So that might be the same for you. What you're doing now might come the next month or the month after. So at least then you'll know now that, okay, July is going to be tough because I haven't got anything in place. An example, it's not a service industry, but I work with some real estate agents. So they know now what July will look like because they know how many sales they've made in May that'll have settlements in July. So really we've only got another 2 weeks to affect the July cash flow and budget because we can't make, because of the time periods for a settlement to occur. Does that help?
I'm pretty sure it would. She has written, I'm keeping a track of all proposals sent out and the likelihood of these coming through. So pipeline, sales pipeline, good on you, Susie. That's a great idea. And she's then added, yes, thank you. So we've got a happy customer. All right, Sarah.
Yeah, definitely measure, just
Sorry.
1 point, with your pipeline, measure how many you're winning and how many you're not winning, and measure the type you are winning and the type you aren't winning, because then you'll know not to waste your time. There might be a key criteria that it's the sort of industry that it doesn't, that sort of area doesn't go with your sort of business. So that will help you as well with your planning going forward, so you're not spending too much time quoting what you're not winning.
Sure, good ideas. Sarah Keys has also asked a text question. Just to remind people, you can put your hand up, we can unmute you, you can have a two-way proper conversation just virtually. Sarah has asked, however, what is the difference between having a hobby or having a business, especially according to the ATO? Is it how much profit you make?
It's sort of a grey sort of area. The base rule is $20,000 turnover, so in sales. But it's all like what your activity is that you're doing it. So if you're marketing the business and if it looks and smells like a business, like it looks like you're doing it for commercial gain, well, it probably is a business as opposed to a hobby. But it is really hard in that startup phase with some things to realize whether it is a business or isn't a hobby. But as you start to earn stuff, well, then it will be. And But their rule of thumb for commercial, to be able to claim commercial losses and that sort of thing, is a $20,000 turnover.
Sure, good tip. Interesting question, that one. I haven't seen that one before. So people, we
Have a
want,
look at
does anyone else want to ask a question? Sarah said thanks. I thought you'd all have end of financial year questions you'd be dying to ask. Now's your chance. Put up your hand or send us a quick text. Don't seem to be any more questions coming through, so I might just move on and do some last announcements. Hopefully you've enjoyed tonight's session. I want to let you know that there is another financial management session, but it's different to tonight's session. So tonight was very much at a basic level. If you'd like something just a little bit higher level, it's a good progression from here. The how-to, we're scheduling that on Wednesday the 15th of June at 7:30. I hope that's a time that suits you and that you can join us. The top one on there, very first time we're offering it, local search marketing. That's been a really well received one. We've got quite a few people already registered. In fact, I dare say we can't take too many more. If you're really busting to come to that, particularly if you've got a business that's targeting a certain area, like you'll say a doctor or a hairdresser, you can only ever take business from a certain local area, or you have a retail store and you're trying to attract people to that local position, then this would be a good session for you. Lots of social media, cutting edge stuff on that. That's next Monday, same time. And finally, planning your successful business. Again, good timing there at the end of the financial year. It's a lunchtime session and we hope you can get on. Remember, all these sessions are free. All you need to get on and do is go to business.qld.gov.au, and if for any reason you can't make those days or times, there are live recordings available on our YouTube account, which you can find at our website. So also be reminded that business.qld.gov.au is the DD's dedicated website. It is extensive. Like Melanie pointed out, there may be templates and examples of things you're looking for, so it's a good first point of reference for anything business related. And there's also a hotline you can call anytime, 1300 363 711, and ask for free business information. If they can't help, they will certainly point you in the right direction. Finally, I'd love to thank Melanie for getting on. I'm so glad you did join us, albeit a little bit late, but it was hopefully all not too bad with just having me, not a trained accountant at the start, people. So thank you for your understanding on that front. And look, we are sending you a survey right now via your little text chat. It is a requirement with us and our contract with DD that we do need feedback on all sessions we hold. We need to know what you thought of it, what we could do better, what worked well for you, so we can take that on board and plan future sessions. So Jag is just the process of texting that out. You should get it, turn it up, and we'll stay online for you to send that. I'm just going to prompt Jag to send the survey link because I can see he hasn't done it yet before I sign off. So thanks once again, Melanie.
Yeah, no problems.
Really great having you on here. And Melanie will be joining us at that next session. You were available for that one, I believe, was confirmed today as well?
Yep.
Great. So good having you on here. So I'm just asking Jag to send the link. Hasn't gone out yet. Like I said, I will sign off though. Thanks for getting on. Please tell other people about these sessions, and we hope to see you on one of these again real soon. Good night.
Muted.